Financial tips for freelancers. Being your own boss requires work-life balance, self-motivation, and discipline. As your own boss, you'll need to take care of your own finances, your own insurance, and your own retirement savings. Here are 8 steps to help you succeed as a freelancer. Number 1. Make a budget. Track work expenses such as supplies, internet and cell phone plans, gas, etc. Some of these can be tax deductions, or you may be able to negotiate material reimbursements with your clients. Number 2. Keep track of your time. No matter how you are being paid, by job completion or by the hour, it is essential to keep track of your time to make sure you are being paid accurately. Using an app or even an old-fashioned time card can help you do so. Number 3. File quarterly taxes. If you are self-employed and expect to owe $1,000 or more in federal income tax, the IRS may require that you file estimated quarterly taxes. Review the IRS rules on estimated taxes for more details, or consult a tax professional if you are not sure which rules apply to you. Even if you are not required to do so, filing quarterly taxes lets you pay taxes in smaller increments, 4 times a year, instead of one lump sum at the end of the year. Number 4. Have a separate bank account for your business. Creating a separate account for your freelance business helps monitor your income and expenses. Mingling personal funds and business income can get messy. This setup can be particularly helpful when tax time rolls around. Number 5. Back up your data. Missing a deadline can be a nightmare, but losing your work in the final hour and scrambling is even worse. Time is valuable, especially if you're a freelancer, and using it to redo work means you might be missing out on the chance to land another paying gig. So back up your data frequently using an external hard drive or a cloud-based service. Number 6. Purchase disability insurance. Disability insurance can provide you with income if you have an accident or illness that prevents you from working. The insurance income can keep you from going into debt to cover your basic expenses while you're laid up. Be sure to get a policy with an own occupation writer. Without it, your insurance company may refuse to pay your benefit if they deem that you can still earn money outside of your current occupation, and that might be at a job that only pays minimum wage. Number 7. Don't forget about retirement. As your own boss, you'll have to take retirement savings into your own hands, and you won't have perks like matching funds to incentivize you. Self-employed workers have several options for retirement accounts, including individual 401ks. It's a good idea to schedule automatic transfers from your checking account to your retirement account to ensure your savings and investment plans stay on track. Just make sure you'll have enough money each month to cover the transfer. Also, consider contributing to your retirement account with windfalls, such as tax refunds or big client payments whenever you can. Number 8. Build an emergency fund. Experts recommend that salaried employees set aside money to cover at least 3 months of expenses in case of a financial emergency. However, when your paychecks vary, you should consider saving 9 to 12 months of your expected monthly salary to give you a cushion if you are in between projects or if you face an unexpected expense. If you have dependents or fixed expenses like a mortgage or a car payment, aim for the higher end of the saving spectrum. Following these 8 steps should give you some tools to succeed as a freelancer, no matter what your gig.